What's up, everybody? This is Taj from ATS Business Financial, doing business as ATS Tax and Accounting Service in Warren, Michigan, providing services to small businesses and individuals throughout the USA. Today, we are going to talk about certain tax deductions which can be utilized by W2 earners like you, like me, and like everyone here in USA. We understand when we file, we have to choose some filing status, either single, married filing joint, or head of household, or surviving spouse. There are certain standard deductions given by the government, like when we file married filing joint, standard deduction is $27,700. That's we deduct from our income, and then we pay tax on remaining taxable income. Single is 13,850, and household is 20,800. So let's talk about certain tax deductions which are usable by a taxpayer if you or me or he or she itemize. They are not workable mostly with the standard deductions. It means if your itemization or itemized deductions are more than 27,700, if you are filing joint, then it all workable. First of all, one of them is very important is charitable donations. Whenever we give donation to any federally qualified organization like any church in USA, or any masjid, or any gurdwara, or any temple that's being qualified by federal government, then that's the deductible on our Schedule A. We can deduct cash paid to them, or any stuff like a cloth or shoes or anything usable stuff you give them, that's also deductible. Next, very important is vehicle or property tax, sales tax. Whenever or we buy property or any auto, we always pay some sales tax. Either you can choose sales tax, or taxes you pay to state or local government. One of them you have to choose, either sales tax or the tax you pay to state or local government. Just keep in mind the limitation is $10,000. You cannot deduct more than $10,000 in any tax year. So usually, whichever you have to be mindful, whichever is more. If it is sales tax you paid, that's giving more benefit, you will choose the sales tax. Or if the federal, state, and local taxes you paid on, that's more beneficial, you'll choose that one. Third category is your house, your home. Whenever we buy a house, we usually in USA we borrow money through bank or any lender. Any interest, any mortgage interest which we paid, that's deductible from our taxable income. If we itemize, keep in mind, if we itemize, that one is deductible. Also, any property tax, again, if we itemize, that's also deductible. Third is residential energy tax credit. You see, like nowadays, we get the higher utility bills. Most of the people, they are getting installed, like they are getting energy equipment installed on their houses. The installation cost and equipment and everything is deductible. For 2023 is 22%, and it's, I believe, it's the last year to claim that one is 2024. So 22% is this one, and this year, and last year it was 26% of your cost. Education credit, that's the next one. If you are an educator, teacher or someone, then $250 you can deduct from your income. Another one is the education expenses you paid for you, if you are going to your qualified federally qualified institute, or if you paid for your dependent child, like that could be tuition, books, supplies, transportation. Keep it in mind, you should get the 1098T from the institute where you paid the money, that's deductible. And there are certain limitations, of course, to on that one. Third one, or next one, I will say, is the 401k or IRA plan. Those are the things. 401 is a saving plan that's given to you by your employer, and or if not, you can invest your hard-earned money through your IRA. Anything, any dollar, each dollar you invest, to your 401 or IRA, that's taxable from tax deductible from your income. That's actually pre-tax money. So you invest in that one pre-tax money, you pay tax on the remaining income. Keep in mind, depending on the choice of your plans, you might have to pay tax when you draw money when you reach at the age of 59 and a half or 70 years old. That's whatever is the limit. Next one is the medical expenses. Yeah, that's very important credit. If you invest, I mean, if you spend money on your medical bills like a clinic bill, doctor's bill, dentist, pharmacy, lab, hospital, and those expenses are more than 7.5% of your AGI, adjusted gross income, then you can deduct those one on Schedule A if you are itemizing. Suppose your income AGI, adjusted gross income, is $100,000. 7.5% of that one will be $7,500. Anything you spend on medical expenses over $7,500, that's deductible from your income. So suppose you spend like a $10,500, so $3,000 you can deduct from your taxable income. It will give you huge benefit on your taxes. Next one is HSA. It's health saving account. It's very very clear from its name, health saving account. Anything you contribute to your health saving account, pre-tax money, that's deductible from your income. I'm sorry, it's a post-tax money. After paying tax, anything you spend or you contributed to a health saving account, that's deductible from your tax return. And yes, any money you got distributed to you, you got it, and you spend on your medical bills or those bills, that's also a tax-free income. So why not? You should have to invest that one. And keep in mind, the limitation for there is a limitation for single is $3,650, and if you have a family plan, the limitation is $7,300. Next, I will say very important is the child tax credit. Each child under 17 years of old age, it's get $2,000 deducted from your income. Some of that part is refundable, and remaining is non-refundable tax credit. If your child or dependent is over 17 years of age, then you can deduct non-refundable $500 from your taxes. Next, very important is earned income tax credit. That's also depend on your income. If you are married filing joint and your income is less than 63,698 and you have one child, you can deduct $3,995. If you have three kids, you can deduct $7,430. Keep in mind, those credits start getting wipe out after your income reach on 63,750. So those are the very important tax credit that's I wanted to discuss very quickly. If you have any question, give me a call at 248-346-6441, 248-346-6441. Thank you very much.